I'm Kalila Reynolds, and welcome to Taking Stock. I hope you guys had a great Easter, especially considering the circumstances, and that you stayed inside. Well, I'm back with the latest business news and how it will affect you and your money. So come on, let's get this money. First up, with the number of COVID-19 cases in Jamaica doubling rapidly, one financial analyst is predicting $150 billion in lost taxes. We'll hear the reasoning behind Dennis Chung's prediction. And the country is turning to the IMF for special assistance as growth projections are revised downward amid the great lockdown. We'll speak with IMF Resident Representative Dr. Karim Youssef. And later, the analysts weigh in on the latest stock market developments. With numerous confirmed cases of COVID-19 emerging from one call center in Portmore, there is mounting pressure for the government to close all call centers. What would be the economic fallout? We'll discuss. But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart. The parish of St. Catherine, which has become the new epicenter of the COVID-19 outbreak in Jamaica, is now on a 7-day lockdown. The containment measures follow an outbreak at the Alorica Business Process Outsourcing BPO Center in Kingston's main suburb, Portmore. More than 50 confirmed cases have already been linked to the call center. Business has halted in the parish, and citizens are only allowed to shop on Wednesdays and Saturdays. The lockdown has had spillover effects on the capital, which relies heavily on workers who commute daily from Portmore. There was a mass exodus from the parish on Tuesday night after the lockdown was announced. Several St. Catherine residents have since been caught as far away as St. James. Just 5 months after ending a standby arrangement with the IMF, Jamaica is again turning to the fund for help. This time, the country is seeking access to the rapid financing instrument to manage the fallout from the pandemic. In a letter to the IMF Managing Director, Finance Minister Dr. Nigel Clark says the pandemic poses balance of payment risks to Jamaica that threaten the country's economic gains. The RFI provides rapid financing to IMF member countries without the usual conditions of an IMF program. The IMF projects that Jamaica's economy will shrink by 5.6% this year as a result of COVID-19. The global economy is projected to contract by 3%. Still on the economy, Standard & Poor's has revised Jamaica's outlook from stable to negative. However, they've also affirmed the country's long-term foreign and local currency sovereign credit ratings at B+. S&P is the second international credit ratings agency to maintain Jamaica's credit rating at B+ in recent weeks, even as several other countries have had their ratings downgraded. Fitch did so on April 10, while revising Jamaica's outlook from positive to stable. The Finance Ministry says it will review the possibility of reopening applications for the Compassionate Grant under the CARE program, which closed on April 16. Nearly 500,000 people have applied for the CARE program. 84% of the applications are for compassionate grants, a one-time $10,000 grant, about $72. The compassionate grant is targeted at helping the unemployed, informally employed, elderly, and college students. The ministry says the CARE program is at the limit of the $10 billion, or about $72 million budgeted. The possible reopening of applications will be reviewed after the upcoming supplementary budget is tabled and approved. We may never know the full extent of job losses due to COVID-19, ironically, because of COVID-19. Statin's April 2020 labor force survey has been cancelled. Data collection was scheduled to start on April 1 and take about 6 weeks. The agency took the decision to minimize the risks to data collection staff and households with which they would interact. Labor market indicators will therefore not be available for April. However, Statin is looking to incorporate a COVID-19 module in the July survey. The virus has also led to a postponement of data collection for the 2020 Survey of Living Conditions, which was scheduled for June. Meanwhile, tourism businesses now have a 6-month window before paying all licenses and fees. The Tourism Ministry granted the moratorium to provide support to businesses in the sector in light of the impact of COVID-19. And oil prices continue to fall even after the U.S. benchmark hit an 18-year low of less than $20 a barrel last week. On Friday, the commodity stood at $18.27 U.S. The price of crude has fallen by over 60% since the start of the year due to a price war between Saudi Arabia and Russia, and then the economic toll caused by the coronavirus. The International Energy Agency says global demand for oil will fall by the most ever this year due to the global lockdowns to contain COVID-19. The agency expects the slide in demand to be the most intense this month, dubbing it Black April for the energy market. Demand is forecast to drop to its lowest since 1995. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, Jamaica is again turning to the IMF as the global economy is expected to experience its worst recession, some say since the Great Depression in the 1920s. We'll discuss with IMF Resident Representative Dr. Karim Youssef and Financial Analyst Dennis Chung. This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy. Welcome back to Taking Stock. How bad will the economic fallout from COVID-19 get? Financial analyst Dennis Chung has crunched the numbers. He joins us a bit later. But first, I have the IMF's resident representative to Jamaica, Karim Youssef, as the country turns to the fund for some help. When I invited you on this program earlier in the week, I didn't know that Jamaica would be applying to the IMF for the rapid financing arrangement. So tell me what that is first and what the possibilities are.
You heard the managing director of the IMF during the spring meetings this week. She mentioned 3 focal points for any policymaker. First, protect lives. The fact is, you can't have a healthy economy without a healthy population and people being healthy. Second, protect livelihoods. This is about creating lifelines for households and businesses, whether the policymaker chooses to do cash transfers, targeted cash transfers like was done with the CARE program, or financial institutions are encouraged to work with their borrowers through loan moratoria and payment holidays. Third, plan for the recovery. You do this by trying to reduce as much as possible through good policy action and forward planning the risk of irreversible damage to the economy. Now, as far as the RFI is concerned, and to get to your question, I just had to contextualize it in this point in time where Jamaica is. So after the exit of successful IMF arrangement, there is not so much a need for set prescribed policies under another IMF program that would require a set of conditionality to last another 2 years or 3 years, as was done in the past. What instead, I think the authorities have chosen to do, the Jamaica authorities have chosen to do, is to request what is called a rapid financing instrument from the IMF. Now, the rapid financing instrument is designed specifically with the current situation in mind. This is something that...
So this didn't exist before COVID-19, the rapid financing instrument?
It existed in different modalities throughout the last couple of decades, but the rapid financing instrument has been used most recently. You would have heard of the use of the RFI instrument during the Ebola crisis in 2015. What this instrument does is it allows for very quick access to fund resources to meet an urgent balance of payments need that is done in a more flexible way than traditional fund programs. And what I mean by that is that it allows for funds to be disbursed in one go without the bells and whistles of fund conditionality, ex post fund conditionality that are usually required to have economic policy be reformed.
That's an important point. We're going to stick a pin right there and come back to that point. I want to welcome Dennis to the program. Dennis Chung, hi.
Hi, Khalid, how are you doing? Karim, how are you doing?
Hi, Dennis. How are you? I hope you're staying safe.
I see you've put on a beard for the occasion.
It's getting longer, that's for sure.
So, Dennis, you recently wrote a really sobering and eye-opening piece for the Jamaica Observer and the Sunday Observer, looking at the projections for our losses, at the losses for tax revenues, unemployment skyrocketing, where GDP is likely to be. Walk us through some of those numbers. Give us this stark reality, starting with the tax losses, the revenue losses.
Well, on the tax losses, I looked at it by industry. So I looked at the industries and I said, which industries are likely to be affected, right? So we have tourism, which has a significant workforce that's going to be affected. And they're almost going to be totally wiped out for a period of time. I looked at the wholesale and retail sector, right? And then based on all of that, I did some assumptions. And I said, basically, I expect that tax revenues are going to take maybe a 50% hit during either a 1 to 3 month period or a 3 to 6 month period. And that's why it's very important that we manage this situation carefully, because if it goes on for too long, then we're going to have a problem. And if we look at tax revenues taking a hit of 50%.
That is a huge hit, 50%. Can we even
over
afford
a 1 to 3 month or a 3 to 6 month period? Because remember, apart from the official numbers that you're seeing out there, you also have the informal economy. So the bars and restaurants are going to take a hit. The hotel sector is going to take a hit. The wholesale and retail sector is going to take a hit. And therefore, over the period, we might be looking at about a 50% fall off in tax revenues over that period. Now, with St. Catherine closing also, one of the things that we recognize as a private sector is that most of your labor force comes from St. Catherine.
Mm-hmm.
You know, you have a problem there, and a lot of companies are also laying off people, right?
I noticed too that because of the closure, the lockdown in St. Catherine, a lot of businesses in Kingston have had to close. Even banks, which have many branches in Kingston, have had to close because most of their workers are from Portmore.
And that's the issue. So when you look at that, over that period of time, you can actually have a 50% fall. If this thing goes on for 6 months, it's going to be crazy. So a 1 to 3 month period is, I would think, the optimal period in which to deal with the virus and also to deal with the economic fallout. Now, what that means for me is, and this is not even assuming a full lockdown, a total lockdown, I think would be disastrous for the country. And it's not something I think we need to do, but it's based on that. And therefore, I think that we'll be looking at a fall off from revenues in terms of tax revenues over the 2020 year, 2020, 2021, because remember, this is the first quarter, right, of the fiscal year. Of about $150 billion.
Wow, $150 billion shortfall in revenue. And this is a time when people are looking to the government for assistance. You see the CARE program being, oversubscribed in a few days.
Yeah, well, I don't think the government can do anything much more. And this is the point.
They're not collecting revenue, then what can they do?
Right, they can't do anything much more. And therefore, this is why it is critical for us to keep some activity going and emphasize more the protocol and keep things going, as they did in Taiwan, for example, right? So we need to look at places like that. I think a big mistake that a lot of people make is that every night they go on, they turn on the TV and they look at CNN and see what's happening there, and then they think that's the world, but there are some companies that have actually managed to maintain economic activity while also dealing with it much more effectively than the US has. And I think that we need to keep that in mind, because for us, government cannot give any more money, right? Even the CARE program is $9,000 over two weeks, which is half of the minimum wage. The private sector, if they're totally locked down, will have no money to give anyone, and all this funding that's being raised will no longer be there. The truth is that the only place that we could actually go to, which is what I was saying a week ago, is Karim, the IMF.
Well, let's bring Karim back in. So, Karim, a lot of people are hearing IMF and is like, oh my God, we're going back to the IMF. We're just done with them and now we have to go back. You were making the point before I interrupted you that it's not the same kind of program like an EFF for a standby arrangement. It's a completely different type of IMF program. It doesn't have the same types of conditionalities that previous programs Jamaica would have been on has. So tell me, what are the requirements for this type of program?
So as I was saying, this is an instrument that is designed to provide rapid and low access level of financial assistance to the member countries, available to all the member countries of the IMF. It's meant to provide to meet urgent balance of payment needs without the need of having a full-fledged program in place. It can provide support to meet a broad range of urgent needs that include those that could arise from commodity price shocks, natural disasters, conflict, disease, pandemics like in the Ebola crisis and now in the COVID-19 pandemic. There's about 100 member countries that have come to the fund. I think around 100 member countries that have come to the fund in the recent weeks, seeking access under the RFI. The design of the RFI is for situations where a full-fledged economic program is either not necessary or not feasible. Mm-hmm. In the case of Jamaica, it is the not necessary, I think, that is more relevant. This situation arises when a shock is transitory and is limited in nature, meaning that it is something that can be expected to recede within a certain amount of time. I heard Dennis talk about the fall-off in revenue for the government. That is a feature of the unfortunate events that are occurring in everyday people's lives where they have to stay home. They can't go about their daily business. While there is uncertainty and this situation is a little bit open-ended at the moment, it is not going to be a 10-year horizon, right? As opposed to other situations where economic policy has not been well designed and is day in and day out for a long period of time.
How much money can Jamaica apply for? Because I saw the letter that was sent to the managing director and I didn't see any specific dollar amount that was asked for. Is it up to the discretion of the IMF to decide how much they're going to disperse, or do we have to ask for something, or how much can we get?
It is on the basis of a BOP need that is defined as a result of a set of discussions between staff and the authorities and then presented to the board within the access limits of the instrument that the authorities are requesting. As far as the RFI instrument itself, the access limit on the RFI is 50% of quota. However, last week, the IMF Executive Board has decided on a temporary basis to increase the access limit in light of the COVID-19 situation to 100% of quota for each member country that will be requesting an RFI. Jamaica's quota in the IMF is 382 million SDR, or special drawing rights. If you look at the exchange rate of the SDR today, that's roughly around 520 plus million US dollars. Now, that doesn't mean that is going to be the amount that's approved by the board. There's a set of procedures that have to be, a set of discussions between staff and the authorities, a set of documents that will have to be the board on the BOP need that is defined after those discussions with staff and authorities. And then, the request will be considered on that basis. But all to say that the 100% limit, the increase of the RFI access to 100% of quota per country that was done last week at the executive board would amount to about 382 million SDR.
How quickly is the IMF turning it around between the request and disbursement?
So we're from past experience, it is a matter of weeks. I've seen cases where it's gone through in less than a month. So it's fairly rapid. The IMF Managing Director Christina Georgieva had a call earlier this week with all the policymakers from the Latin America and Caribbean region, and she was very explicit in her support for a quick level of support and a quick turnaround on meeting the needs of the membership.
So Dennis, coming back to you and some of the analysis that you've been doing, I note too where Statin has just announced the labor force numbers for, I think, the previous quarter, and then spoke to this current quarter that we're in. Those numbers may not even be available due to COVID-19, so we might not even be able to have true numbers of what the unemployment rate is due to COVID-19, and we won't get those numbers because of COVID-19. The irony in all of that is, but you have some projections, you say as much as 15 to 20% unemployment, Dennis?
Yeah, because when you look at it, I mean, tourism, for example, is going to take a significant hit. I don't see where tourism is going to come back before the next winter tourist season, which is, and the minister did say maybe about January 2021. By that time, would have come to the end of the year. The other industries to look at, agriculture and fishing. I don't think that's going to really take a blow because people are going to demand that. But construction, for example,
that will take a hit.
Construction is going to take a hit. Manufacturing, I think, is going to take a slight hit. Mining and quarrying, in terms of the demand overseas. Tourism, which is hotels and restaurants, is 106,000 persons in that labor force.
And now BPO is taking a hit to Dennis.
Yeah, BPOs are going to take a hit. So I think that you could end up with a labor force in the region of about closer to 1 million, 1.1 from the 1.3 something that you're talking about. So you're looking at maybe about a 20% unemployment rate. Remember, in the US also, they projected between 20 to 30%. So, it's not unrealistic that we're looking at something like that.
Really, really grim reality. So, Karim, right now, Jamaica is not the only one that's turning to the IMF. Countries are lining up for assistance. You all don't have unlimited funds. You don't have unlimited money, and the funds that are available are not grants. These are loans. What types of conditions are we looking at for repayment?
The RFI instrument is the same, carries the same terms as the standby arrangement because it falls under the general resources account of the IMF. So the repayment terms begin at 3.25 years from the disbursement. And again, remember, we're talking about one disbursement, one lump sum disbursement, and the payments would continue through to the 5-year envelope or point. And as far as the rate of the loan is concerned, the IMF uses the SDR official interest rate, and then there is a 100 basis point, which is 0.07, I believe, today. So very, very, very low. And then there's a 100 basis point up on that. So, if you consider where private financial markets are at this point, and under this circumstance, this is very favorable.
Well, we're pretty much out of time now, guys, but I'm gonna give you both an opportunity to have a last word. Dennis, anything that you wanted to mention before we wrap?
As a country, we have to ensure that we have some semblance of economic activity going and try and see how we can manage that so that we're dealing with the virus threat and also with the economic situation, because we have people who have not been working for 3 weeks, and most of these people are people who don't have any savings. So it's going to be very important that as a country that we get over this very, very quickly, because unless we do, then we're talking about another level now of economic and social projections that we have to make, and it's not going to be easy. So that would be my last word on it.
Absolutely. Karim?
Yeah, I mean, I'd echo the same thing Dennis just mentioned. Exceptional times are calling for exceptional action, and I think at this point, protecting lives takes a priority. You can't have a good, healthy economy without a healthy population, and you have to also make sure that livelihoods are protected. Then you have to plan for the recovery. That's really the thrust of what needs to be happening.
All right. Thanks, guys. And when we come back, I've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange continued its decline last week, with the combined index falling nearly 3%. 97 stocks traded across both the main and junior markets of the JSE for the week ending Friday, April 17, 2020. 29 advanced, while 59 declined and 9 traded firm. Nearly 274 million shares changed hands on the Jamaican dollar market, totaling $718 million. Trans-Jamaican Highway traded the most, with 103 million shares changing hands. The stock lost 1 cent to open this week at $1.37. Radio Jamaica traded the second highest, taking up nearly 35% of market volume. The stock lost 4 cents to close last week at $1.32. And Wigton Wind Farm rounded out the volume leaders, with people buying and selling 16 million shares in the company. Wigton lost 4 cents to close at 66 cents. Turning to the top advancers now, led by MPC Caribbean Clean Energy, which jumped 26% to close the week at $176.77. 138 Student Living Jamaica Variable Preference followed closely behind, with its share price jumping by nearly 20%. The stock closed last week at $5.99. And to round off our top advancers, Berger Paints Jamaica gained nearly 19%. Berger ended the week at $14.40. On the losing side now, Everything Fresh fell 30% to close the week at 66 cents. Elite Diagnostic also took a hit, down 20% to end last week at $3.77. And Indies Pharma Jamaica ordinary shares fell 18%, down to $2.20. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. This segment of Taking Stock, The Analysts, is brought to you by Ideal Portfolio Services and NCB Capital Markets. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. We're joined by Senior Wealth Advisor at Ideal Portfolio Services, Oric Angus, Research Analyst at NCB Capital Markets, Romaria Sterling, and Financial Analyst from Finance Twitter, J.A. Mark Gale. Welcome, guys. Really glad to have you all on. Oric, tell me, we're seeing the shutdown of St. Catherine, which has been a major development over the past week. We've seen the numbers basically double in the past week as well. And I fear that this is the tipping point now, that things are really going to escalate pretty rapidly from here on. What's your assessment of the situation?
It is getting pretty sensitive, and it's going to get worse. As you can see, we're in a much worse state than we were a couple days ago or a few days ago. And it's just going to come down to how best we can manage these situations. I think that the true test is coming right now. As you can see, there are a lot of speculation about the country being shut down based on the recent cluster of cases that have shown up from the BPO sector. Now, my opinion in regards to that is there are mixed feelings, because we have to think about the implications a shutdown of that sector particularly would have on the individuals who work within that sector. I believe it's some 30 to 40,000 staff members. So I think the government is looking at it from a macro standpoint to see how best they can put other measures in place based on the changes to mitigate those individuals who can possibly be affected by that.
So, Mark, I know that this is something that you follow very closely as well, not just the financial markets, but the overall economy. What impact does this closure have on both the economy and the market?
The impact is going to be pretty significant, to be frank. We've already started seeing the projections in economic growth. So from about a month ago or a month and a half ago, BOJ came out and said that they expect the contraction to be about negative 3% or somewhere in that region. And then recently, the IMF, they published their World Economic Outlook, and the projections for Jamaica are for 2020, 2021 to be negative 5.1% contraction. And then for 2021, 22, 3.8 expansion, 3.8% expansion, and then 2.2% the year after. So, it is, a 5.1% contraction is pretty significant. And with, what has happened recently, what I have called the Alorica jump in terms of, the spike in cases as a result of, Alorica, it's tough because right now the government is trying to balance, shutting down the economy altogether and, all of the considerations that come with that, people that depend on every single day, daily activity, hustling, to feed their family every single day. If you shut down the economy for, 2 days or 3 days, then that's 1 day that they may not have food, or 2 days that they may not have food. That's a big chunk of our population, and you do have to be, kind of careful with that, because if you do that, it can lead to civil unrest, right? So there is that kind of tension that the government is juggling. Mm-hmm. And then, on the flip side, you just have, obviously the overwhelming of the healthcare system and the flattening of the curve, right? And so, but from an economic perspective, the shock is going to be pretty significant. The question is whether or not, how long will the shock be? How long will the economy experience a contraction, and how fast will the recovery be? Will it be a U-shaped recovery? So will, the contraction last, multiple quarters, or will it be a V-shaped recovery where it lasts, 1 or 2 quarters, and that is still, honestly, TBD, because it depends on, the vaccine. But what we do know is that with the shutdown, the spending of, BPO, that is going to further hit the balance of payments from, the government, meaning, all of the U.S. FX that the BPO sector earns is in jeopardy of disappearing, right? So on top of tourism, on top of hotels and all those other things that have already contracted significantly, BPO taking a hit is going to be it can be potentially challenging. So that's why we see the government.
And remittance is also down. So the top three earners of foreign exchange taking BPO's tourism, remittances. Romara, are you seeing any impact on the market at this time based on what has happened in the past week?
After the report of the increase in cases, we saw more stocks declining than advancing. I can't say yet if that's a direct reaction to the news of the increasing amount of cases, but it would be logical for investors to be a bit more concerned, because with the spike in the number of cases, it means that the containment measures could be protracted. And once the containment measures are protracted, then the impact on the economy will become more significant. Because, a protraction of the containment measures mean a longer duration of the shutdown of the economy. Mark would have already alluded to the projections from the IMF and other agencies. As it relates to the BPO sector, a potential shutdown of the sector we can't really say the magnitude that it will have on the economy, because the BPO sector by itself is not, they don't record the BPO sector's contribution to GDP by itself. It's actually grouped in other services. But in terms of employment, we do know that the BPO sector is a significant, employer of Jamaican citizens. As Annie could have mentioned, they employ about 40,000, close to 40,000 people. That's what the Prime Minister said in the press yesterday. And when I looked at the total amount of people that are employed in Jamaica, the labor force, Statin has it at about 1.26 million people. So that 40,000 people employed in the BPO sector would be at about 3% of the labor force. If a shutdown of the should ensue, then 3% of the labor force would be out of a job, and that's significant, and that's just directly, because there are a lot of people that are depend on income from the BPO sector indirectly, such as the beverage industry, the food industry, retail, and even the connection of the BPO sector to financial services. A lot of companies in the BPO sector would have purchased, like group insurance policies for their staff. And if these companies should, leave Jamaica, then they will definitely impact the sector, especially that subsector. And if people are unable to, honor their insurance policies, then it would have a negative impact on the sector as well.
Oric, the thing is that we had just started to see a little bit of confidence coming back into the market. So we had just seen stock prices going back up a little bit. And then this happened with these new cases at that call center. What's going on in your estimation? I don't even know what other way to ask the question. Is it that people are overreacting to the situation, or people are getting fearful again? Or perhaps it is that uptick that we saw in the previous week was just a coincidence?
To sum it up now, off the top of my head, I'd say it's a combination of factors. So one, the earnings season is approaching us, and many investors are anticipating that some of the numbers won't be as good as we would have predicted or expect them to be. So people are bracing themselves for that hit. On top of that, there's been speculation that the market, another pullback will be coming, and a possible recession. So people are taking those things into perspective again. And then in the last point is the recent spike in the number of COVID cases over the past few days. So I think it's probably a combination of those factors right now, which has led to the pullback of stock prices on the Jamaica Stock Exchange. Maybe in the coming days/weeks, we'll have more, as we speak to more of our clients and other players across the industry, we'll have a more solid answer for that question.
Yeah. So guys, looking at the market now, and I know, Mark, you had discussed this when you filled in for me a few weeks ago. Some results are coming out. Earnings season, like Oric said, is approaching. Some companies have already posted some for quarter ended December, year ended December. Icreate is one that's catching a lot of people's attention yet again, in a positive way. Mark, what do you make of it? So it's the audited financials are now out, and that's the only difference from when you were on a few weeks ago talking about the unaudited financials. I see that the auditors have put in a special note there on Icreate.
Yeah. I mean, boy, again, so one of the things I spoke about in my episode, is that. So I'm kind of conflicted, right? So part of me is the entrepreneur, so I understand, how difficult it must be for, Tyrone and team. But, the truth is the picture is not pretty at all. The auditor did include a statement basically questioning the ability for the company to be a going concern. And a going concern just basically means for it to, sustain itself and to continue operating. And when the auditor has to come out and say that there are questions about the going concern nature of a company, it's not a good sign. And the truth is, when we did discuss it, but the audited just makes everything, it revises after the figures downwards, quite frankly. One of the things that, it spoke about is, the current liabilities are higher than it were, when unaudited. And then what was curious or interesting is that the auditors in the notes, right, they say, I forget the note, I don't remember if it's like note 16 or 17, when they're talking about the short-term risk, the credit risk that Icreate faces, right, in terms of it has a number of receivables, and then it also has some bills and stuff it has to pay in the short term. And it said that, the management, basically, hold on, I can tell you the exact quote because I wrote it down. I just wanted to
current liabilities exceed current assets?
No, it says management maintains an adequate amount of its financial assets in liquid form to meet contractual obligations and other recurring payments. That's the exact quote from the auditor. Now, the challenge that I have with that is that when I read through the financials, I don't know that I agree with this. And I'm not saying that the auditor is lying, right? But what I am saying is that, so when you look at, for example, their current assets, they have $13.8 million of current assets. A big chunk of that 13.8 million is receivables, and of the receivables, there are a big chunk of the receivables are expected credit losses that are over 120, between 90 days and 120 days. So just the idea that they will be able to collect some of those receivables, and money is outstanding to them, is I don't know, it's rough, and so I don't know what the next 3 to 12 months is crunch time for them,
Especially now, because the next 3 to 12 months we're living in an uncertain economy. So you may have receivables right now, but right now a lot of people aren't paying.
Well, I actually
going to have difficulty collecting.
Exactly, and as a matter of fact, to make it worse, Kalila, this was as at the 31st of December, right? So that was pre-COVID. So the truth is, they could be knee-deep right now in like extreme cash stress right now, and we don't know, because it does say 3 to 12 months. So more power to the team, and I wish Tyrone all well and everything, but like it's a very, very stressful time for them right now.
I'm sure. So Romario, you've been looking at those numbers as well. You agree with what Mark has said?
Yes, I agree with him, and I'm saying that based on the financial statement, their performance has worsened because their losses have increased. And that's primarily due to a spike in admin expenses. And even though revenue grew, admin expenses grew at a much faster pace. And as a result of that, the losses have increased, and that's also expanded their shareholders' deficit. What they projected in the prospectus is also significantly above what they actually made in profit. Actually, what they made in profit is 68% below what they had projected in the prospectus.
Wow.
Well, actually, no, they projected a profit. So they projected a profit of $7.something million in the prospectus, and instead they made a loss of over $40 million. The revenues now fall short of what they projected. So they projected revenues of over 100 million, and they made revenue of about 40-something million. So just based on what they've projected, they're actually performing way below that.
Mm-hmm.
And then based on the auditor's report, it's really not looking so well for them.
Now, Ulrich, is there anything else on the market that you had your eye on in the past week? Anything stood out?
Well, my focus is really on the main markets right now. Those stocks I'm pretty much focusing on, Sagicor in particular.
They spoke about performing a stress test on the company, and that they're basically good for the next year.
Right, that's pretty much what the article said, to sum it up in a nutshell.
So Sagicor, you're looking at anything else that caught anyone else's attention in the past week?
Yeah, I realized that 2 companies in the tourism sector put out statement about delaying their financial statements being delayed, and that part of the reason was because of challenges as it relates to COVID-19.
Which companies are those?
Margaritaville Turks and Express Catering. These companies' quarterly earnings to be severely impacted because these companies are in the tourism sector, and that is one of the sectors that is expected to see the biggest fall, based on the fact that international travel is basically at a standstill. I think it's an indication of what's to come. The fact that they're actually having challenges already with just getting the statements out is kind of.
It's not just those, but there are quite a few companies who have sent out releases for delayed in the financial reports.
I'm not saying that it's as a result of. I'm not saying So I'm just saying it's interesting.
Anybody that's exposed to tourism and hospitality is going to be hard hit. Instant Wharves in particular to be, hard hit, even though they had a great quarter end of December 31st, 2019. There were early signs that things were going to be rough with them, furloughing employees from as early as January or February, and so I'm expecting that to continue. But one of the things that kind of stood out to me over the last, couple of weeks is, so we had, 2 weeks of, I guess a mini rally, as it were, right? And then in the last week, the last week, we saw, it's a shorter week, right? So it opened on Tuesday instead of the Monday. But, there has been general softening. And, quite frankly, it doesn't surprise me at all because typically whenever you have, in most markets, whenever you have a significant drop, you tend to have a pause. And then the pause will, it can kind of like give investors, wiggles of hope, as it were. Okay, maybe this thing is turning around, maybe that's like the bottom.
Wiggles of hope.
Yeah, and so like people can, when they see the pause, see the drop stop, they kind of, pile in to try and take advantage of, potential upward movement. But then at some point, the steam runs out, and in reality starts to set in, news, comes in, and so like in this particular case, we don't know if it is additional cases, if it was an Alorica jump that did it or whatever, but generally something kind of shakes confidence, and then people start realizing, okay, this can be, this can be dangerous. I need to be careful, and then I need to take some profits or whatever. But I am expecting it over the next 2 months or so, as earnings start coming. The market is going to take a beating. It's going to be very volatile.
Oh, so are we likely to see a new bottom then, Auric?
A new bottom, it's relative. I think, as Mark says, yes, as the earnings season approaches and we start to see reality, then the market will pull back. I can't say if it will get to a new bottom or not. I'll be speculating. But based on how it stands right now, we already said what the earnings season is likely to be. But in addition to that, if the number of cases keep inching up, then it's a possibility that it might have a significant impact on the Jamaica stock exchange. And you could see a new bottom, which provides, in my opinion, what I say, new opportunities.
Buying opportunity.
Yes, exactly.
Yeah, we need to be careful because you don't want to catch a falling knife when prices are falling and you think that it's going to turn around, and so you do your analysis and just make sure stay on top of it.
And buy good companies.
Another company that I would kind of just shout out for investors to kind of watch, Kalila, is SCI, Cygnus. And the reason being is that big fan of those guys, but they have a significant exposure to hospitality. And that was an adjustment that was just made in their last quarter. The quarter before.
Aruba Wine and Dine that they had just purchased. Right?
So they haven't specified exactly who it is, but putting 2 and 2 together based on their Deneb move and whatever, it wouldn't surprise me if that was the play.
I agree with these guys' points regarding the expectation that there will be a fall off in earnings in the coming quarters. Some sectors more than others. Hospitality, entertainment. Those sectors are expected to be severely impacted. I noticed that one company mentioned that this lockdown has been to some extent positive for them, which has even resulted in a new business deal, Mailpack.
Yes.
And based on our valuation that we did at NCB for Mailpack and the fall off in the price, I think it's an excellent buying opportunity at this point, given the fall off in price and the fact that despite what is happening, the company is still seeing some positive gains from it because there's an increase in the demand for delivery. So it's good to kind of look at the opportunities this crisis. I was saying to one of my coworkers that it would be good if one of these supermarkets were actually listed, on the stock market.
Right?
Or national.
Right?
Yeah, it would be good. A lot of people being
bread right now. Bread's flying off the shelves. Okay, thank you guys.
Thank you.
Let's take our final break. This segment of Taking Stock, The Analysts, was brought to you by Ideal Portfolio Services, and NCB Capital Markets. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe below, and share with a friend. Also check out my other features, Money Mondays JA. This week I'm talking about the housing market. Will it crash? In Money Moves JA, I'm joined by an e-commerce consultant who explains how to sell your stuff on Amazon from Jamaica. And also check out What's in It for Me to see if you qualify for any of the government's CARE grants. Follow me on Instagram and Twitter at Kalila Ray. If you want to connect with the analysts this week, check the description box below for their contact information. Tell a friend about taking stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.